So this is one that really makes you think about things here in the United States. Um, there's some suspicious bank runs in South Korea. In Seoul, South Korea, they suspended operations at four more savings banks on Saturday after runs developed as customers rushed to get their money, despite official assurances that the financial sector was secure. The move came just days after two other institutions had their activities suspended and state-owned finance corporations joined forces with commercial banks to pledge billions of dollars in liquidity for a sector beset by souring property loans. Sound familiar? One of those suspended on Thursday was the Busan Savings Bank, South Korea's largest in terms of assets. The Financial Services Commissioner, the FSC, said Saturday that it was suspending three affiliates of Busan Savings Bank, Junggang Busan Savings Bank, Busan 2, and Jeongjao Savings Bank, as well as Bohai Bank for 6 months each. Considering recent waves of deposit withdrawals, available liquidity, remaining deposits, and capacity to borrow, the FSC concluded that they might face a situation where they are unable to pay the customers. So these people are simply going to their local bank, like you driving down the street to your bank, requesting your money, and then telling you, you know what, we're not allowed to do anything for the next 6 months because, well, we don't have your money. So now they said the freeze could be lifted if they recoup their liquidity. They could be. They might be. They might be able to give you your money, maybe. The FSC on Thursday put a 6-month block on operations of the Busan Savings Bank and its affiliate and announced steps to support others that may be hit by increasingly precarious-looking property loans. It's the country's largest savings bank with assets worth 3.7 trillion won, or approximately 3.4 billion US dollars. Last month, the regulator shut down Samwa Mutual Savings Bank, which became insolvent because of soured property loans. Woori Finance Holdings Company, South Korea's second-largest financial group by assets, was chosen Friday as the preferred bidder for Samwa being sold by the state-financed Korea Deposit Insurance Corporation, or the KDIC, much like our FDIC. Woori, which beat out two local rival bidders by Samwa, will inject fresh funds worth 90 million US dollars, while the KDIC will fill in the bank's unspecific debts asset gap. The FSC said on Thursday that 94 of the country's 105 savings banks meet capital adequacy standards, and it didn't expect any more suspensions in the first half. It doesn't expect any more. Who knows what might happen? But the bad part is, they weren't clear about whether if the three institutions that were suspended Saturday were among the 11 that were deemed to have inadequate capital. So they could have been wrong all along. Basically, these people are unsure about their money being in the bank because of bad property loans, so they decided to go get their money out before anything happens. But they don't have the money. It's just gone because of bad property loans. So you go to your bank, you want your money, but they say, sorry, we just don't have it. We're going to close down, and we're not going to do anything. We're not even going to be open. We're not going to have any activity here for the next 6 months. Might be able to open sooner if somebody gives us some money, but looks like we're closed for now. Sorry, you can't have it. You're just out of luck. So, just something to think about. Makes you wonder about things here in the U.S. Bad property loans causing banks to lose money. So, we'll see how it goes. Thanks for watching.